Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Hey folks, welcome back. We've heard a lot of people over the years talk about get into real estate and flip this property, flip that property, quick turn transactions, even with multifamily properties for a few years there, it seemed like everybody was buying them and flipping them 18 months later for 100% returns. But if you look at the history of real estate, it is really all about buy and hold. Hold. We forget about that, the hold side of things. Well, today's guest, we've got Jen Ruelens zooming in from beautiful Pennsylvania, and Jen knows all about this. She has a ton of experience in helping people manage their properties long term. She's very, very passionate about long-term hold of properties. Makes sense. That's the business that she's in. But you can see, if you're watching the YouTube channel, you can see "Get Rich Slow" is on her t-shirt. So, Jen, welcome to the show. Great to have you.
Thanks so much, Dave. And you're right. I'm known as Hold It with PM Jen. The PM's for property manager. Over 23 years of managing very large portfolios of mostly Class A and B scattered site up here. I've done multifamily apartment communities, but my business for 14 years has been one focus, property management. I'm the broker and owner. We run a really large portfolio for what I call everyday American investors. They own 1 to 5. Generally speaking, although we have larger
single-family homes, typically is that
single family and small multifamily. So twosies, threesies.
Yeah. Okay, very interesting. That, from what I've heard, Jen, is a very challenging business model to crack, which you have. So hats off to you, because that's one of the biggest complaints I hear from single-family home landlords is finding quality management at a distance that does a good job and doesn't break the bank. So you've got experience. You start out, it sounds like you started off in multifamily. What caused you to kind of switch over to single family?
Oh, the last housing crisis. So whenever you've been in real estate through multiple cycles, I always say these down markets create pivots. Whether you're an investor, like maybe you were doing a flipping business and the interest rates change and now all of a sudden you're a buy and holder, right? A lot of careers change in the pivot. So last market downfall, I was leading 500 doors for a home builder slash holder. So they would build new home communities and sell, and they had the rental.
Which downturn are you referring to?
0809.
Okay, because there's been another one since then in the multifamily.
And so in that one, my company had always balanced like the new home sales with the buy and hold. But as you know, things changed so much. They compressed, laid me off, and I ran my happy little ass to get an MBA at Penn State. So I rode out the rest of that wave to getting a finance and real estate MBA at Penn State, doing a full-time program where I met and fell in love with my husband. And I came to Williamsport, where there aren't really large apartment communities. There's amazing fly fishing and so much to enjoy here. But the big real estate, the big sexy real estate just isn't here. But what was going on was the oil and gas boom. So we had a lot of people trying to take advantage of that. And my little property management company opened up, and that was the thing I knew how to do amazing. And I'd partnered with a local sales company, and we started it 14 years ago. And since then, I've bought them out and do it all on my own. But it's really,
sales company for what? Selling
real
what?
estate sales.
Okay, so brokerage,
like a realtor, right?
Yeah.
And when you talk about the difficulty for the everyday American, like you are in British Columbia, but maybe you get hold it with PM Jen's playbook for North Central PA and learn that we have $65,000 average unit cost with an average cap rate of 11, and you go, well, I got a checkbook, I can get down there and make a transaction happen. And you find a person like me, it works great. But honestly, in most of our small markets that offer these deals, you aren't dealing with a high degree of professionalism. And that's part of what Hold It with PM Jen's about. I evangelize this asset class. I'm all about the hold, but I want my industry to do and perform better. I think the real estate industry and our professionals could elevate a whole lot in our country.
So what over the years, what have you learned, and what do you do differently than most other kind of, forgive my French there, but half-ass property management companies that are kind of tack it on to a realtor office and and it's just a necessary evil to keep their clients kind of happy. Like, what do you guys do
You've
differently?
got it. That's
Yeah.
why most real estate sales professionals are doing property management is they don't want their investor clients who need that help to go up the street to the other company and they build a relationship. Which, by the way, One Focus Property Management, all we do is property management. We don't sell. So hopefully we're a better partner to our real estate friends than that. We go, hey, bring them to us for management. You can do all the buying and selling. Um, what have I learned? I've learned that our culture, society, the way we operate is all about getting rich fast. We want
Mhm.
it now. And that's why I think in real estate, so many people are attracted to the flipping and wholesaling and these syndication deals with like 3 to 5 year, cash outs and exit events. And I always say, you can make money buying and selling real estate. You can,
Mhm.
but you build generational wealth when you buy and hold it. And that is because of what I call the five-way payday. So in the United States of America, if I buy a piece of dirt and I hold on to it, there's 5 ways it's going to pay me most of the time, right? Maybe more if you got more, but it's cash flow, right? However much income it is, less the cash I put out. The appreciation, easy to understand, appreciates over time. Leverage, right? So my principal pay down, I get tax advantages. And then the one that like people young like me, I still calling myself young. I'm the oldest millennial that ever was in my mid 40s. We don't have adult experiences in a rational like inflation interest rate environment. We think this is high and out of control. We don't understand it from a historical context. I just talked to two 38-year-olds who are doing amazing, but they're feeling the pinch of like raising young kids and having 3 real estate assets under managers in different parts of the country. And they're going, is this asset even any good? Are you a good manager? And I'm like, this is what it is. It's not like real estate, the last dollar you put in is on closing day. It's an active thing. And all those ways it pays you, it's so
So
ridiculously
sorry, what was the
profitable.
fifth one? You lost me on the fifth one.
Inflation hedge. Sorry, I did
Okay.
not say it out loud. You're so right. Us young people don't understand how real estate, how well it performs against inflation. And it's truly unique as an asset class to have all these things going for it and to have it be the best thing that keeps in pace with inflation. And so, but it's a long con, right? I buy this property. I put a big chunk of money down today. I deal with all the problems over the years, pay that debt down, make decisions, deal with what comes up unpredictably. And then when I'm old, I have something that's worth a ton of money and pays me. And it's not for everybody, but it is for many people in America. And what I love is like everyday Americans. A plumber can put together 50 grand or can do a backdoor something with their 401k and put it in an SDIRA and do all these things. A regular person can do that and can own a single family house, a double. I don't think people need to be aiming for 10, 20, 50 units. I don't think we should be trying to retire
Well,
early.
what is your kind of recommendation for people long term, these mom and pop real estate investors? What plan do you recommend for them for number of properties and time frame?
Yeah. I don't usually prescribe, but if I had to give a prescription, let's
Mhm.
aim to get 5 units,
Yeah.
5 long-term units that are stabilized and well positioned. We don't have hard money loans on them. We're not, beg, borrowing, and stealing everything to get into these. These are reasonable investments that don't tax us, that we can keep up with and manage them in a stabilized way forever and ever. Work
Yeah,
with your
well, I've heard
financial
a number of people
professionals
say
about the
that,
mix,
Jen. It
but
makes a lot of sense because, if you get those five properties, if you don't need the cash flow today, feed all of the cash flow into paying down the mortgage of one of them, then accelerate the next one, get them all paid off in 10 or 15 years. Five free and clear properties in 15 years is a good
and if you start
income.
early enough,
Yeah,
there's a midway point there where you can cash out and grow the portfolio off of those,
if you want to.
right?
Yeah.
Some people just pay it off and they go, I'm 45 with paid off rental properties, and that's just fine for them. Like, there's
Mhm.
so much about your situation you have to figure out. But I think what I want to tell you is if you like the idea of building generational wealth and you're comfortable with getting rich slow, then you need to be comfortable with not having the cash flow today. So you
Yeah.
can't retire early. You can't do those things if you have, I was talking with these 38-year-olds. They're my friends and they own this real estate. And we were talking about it and they're like, I do want to retire early. And I'm like, great. Then you need to do something exceptional. you haven't built an exceptional portfolio to retire early. But there's nothing wrong with your earning ability, with the way you're living. And so I think we just have a lot of fascination on that real estate's this key. This is a good example. It happened last year, not this year. AI came out and everybody got scared of AI. I had 3 different software engineers come into my office, say, they're mid-40s, mid-career. I have $500,000 in my 401k. I've heard you talk about 20% cash on cash in your market. I'm ready to turn this because I think AI is going to have my job in less than 5 years. So take this 500K and with a 20% cash on cash, I've just replaced my $100,000 a year income. And they feel so smart. Oh my God, they feel so smart. And they come into me and they're like, this is going to be the biggest sale I've made. I'm going to be so exciting. And I say, I'm so sorry, friend. No. Buy and hold real estate doesn't work like that. And for those of us who've done it, we know it's not giving us, as I call it, Red Lobster money, right? The cash flow every month. I can't take that
it's not,
to Red Lobster.
It's internal rate of return. It's not cash on cash return. So they got mixed up with the 20% total returns if you take all the different profit centers into account versus the jingle in their jeans at the end of the month.
Yeah, and there are still abnormal opportunities you can get where the cash flow is crazy. But if you're a buy and holder, what the hell do you need that cash flow for? You're just going to be paying taxes on it. So you're just going to be putting it into the next asset or improving this asset for appreciation. So I'm a big fan of get a job, work a job, have a business, and make real estate a part of and listen, if you're not able to deal with the tenants and the problems, then hopefully I'm working in the background, making really amazing property managers for you to take advantage of. And until then, listen to property managers who are doing education and demand more of your property manager. It doesn't mean you can't do it. You certainly can. And now with all the tools, DIY management is more possible than ever.
Perfect.
Lots of
Speaking
opinions
of which,
on that.
if people are interested in finding out more about this and maybe more about you, where's a good place for them to go?
Hold it with pmgen.com, pmgen.com. And you'll find my socials, my podcast, my playbook, my shopping list. I'm really just all about being your buddy and your partner through the hold of buy and hold. There's plenty of people out there talking about the buying and the deal making. I'm talking about the unsexy long part.
Well, some of us find that sexy.
I love it. I am not a person who's trying to make this business less about inspections, less about conversations, less about grit. I think that's where the money is. I think that's where the magic is. And I was just blessed. I always say baby Jesus gave me all the things to be a property manager in an extra dose and said, make her 6 feet tall and all these things and we'll just see what happens. And that's what happened. I came out ready to manage property and I find a lot of joy and fulfillment in doing this for my clients. I think it's like a superpower.
One thing, there's potentially 2 more ways people can make money with your properties. Jen, would you like to hear them?
I do. I'm ready.
Yeah. So one is instant equity. So if they're able to buy the property at a bit of a discount, the money's in the buy, as a lot of people say. So instant equity is another profit center.
Well, the money's not in the buy, it's in the hold, but we'll fight about that later.
Exactly. But you can make an extra little chunk of change if you get a $10,000, $15,000, $20,000 discount off market rate.
Sure.
And then the last one is related to appreciation, forced appreciation. So making renovations, doing some repairs on the property, ain't forcing up the value in addition to normal market appreciation. So there's 2 more for your tool.
You know what? I'm not gonna, it's the 5-way payday. That's so freaking catchy. But I am in the appreciation going to build the 3 ways it appreciates, right? Yeah. Natural market appreciation, forced, and then the instant equity. And I love those because guys like us who have deal flow, we do this all day long. The newbies don't even consider that. I don't take a deal where I'm not getting instant equity. Why would I? I have crazy deal flow. I pick and choose the best.
Exactly. Hey, Jen, this has been fun. Thanks for being on the show.
Thanks, Dave.
All right, everybody. Thanks for tuning in, and we'll see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviewyou.com.